Guys, a young investor here back with you with another video. Alright, so this video will be going over risk management and how to avoid blowing your account. Alright, somebody one of my followers DM me basically their Robinhood, showing me their account balance of how much money they made and how much money they lost. So he showed me the all, and I asked him, can I use that as a example for traders if they don't use risk management of what would happen. He said he would love if I did that, and in the return he would get this video. So it's 1 for 1. Perfect risk management on that one. All right, so by that being said, I'm going to walk him through a trade that I randomly picked out. I randomly picked out Apple, and I didn't look at the chart over here just yet, but I'm going to show you guys how I would have approached this trade basically for Apple. Basically, I would have looked at the NASDAQ and stuff like that, see what direction the NASDAQ was going in. If the NASDAQ and the SPY and everything was moving down, then I would have shorted Apple. In this case, on Friday, the NASDAQ pushed down, it was going down. So more than likely, the direction of it from last week, I predicted last week that the market would move down. So more than likely, I'm going to short this. So by that being said, the VIX was also up on Friday. So by that being said, this is one resistance. This is a support. Resistance because it struggled to go above this price. That's why I'm picking that. A support will be right here as well. This is where it bounced. Another support would be right here, you can say, where it bounced. Another support. This is the previous day, the previous trading day, you guys. The previous trading day. So this is the previous trading day. You see these lines? These lines is the previous trading day. So all this was Friday. No, all this was Thursday, and all this over here is going to be Friday over here. So let's see what happened on Friday. Let's get off Thursday. We just took some support, some resistance from Thursday, and now we're going to look at Friday. All right. But before we get into that, you see this. This is where it closed at. Let me remove this. All right, I'm gonna remove this. All right. This is where the stock closed at right here on Friday on Thursday. So huge gap open. Maybe the SPY pushed up overnight. Huge gap open. About what was that? Almost about a good percentage. Almost $1. A huge gap up happened overnight. So this big gap right here. Usually a stock for the gap below in the trading day. So we're gonna short this and hope this thing for the gap below wants to break the support. So this is where it opened the next day. So we're gonna put a support right here, because once it cracked this low of the day, well, this right here is no support down here. Once it break this, we want to short it. We want to short it once it break this 220.43. Now on these big caps, I usually take 25-cent risk. So 25 cents from 43 will be about what's that? 68. So my risk will be up here. So I'm going to put an arrow of my risk. Okay, so this is going to be my risk at 68 right here, and I'm gonna enter right here if it comes to this level. All right, I'm gonna make this one green because that's going to be where I enter at. All right, that's going to be where I enter at, and we're gonna make it large. Okay, boom. That's where I'm going to enter my entry. My entry is at 220, 44, 43, whatever, and stop loss is at 220.68. Now, if it come down to this and break this, I'm going to take a short position, betting that this thing cracks back down to the previous day close, where it closed at the previous day. All right, now, as we can see, this is going to be a support right here as well, but we're going to ignore it for now because I don't want too many lines on the screen confusing you guys what's going on. All right, so let's go over. All right. So this is the previous day. This is Thursday. Now this one candle equal another. This is the next day. As you can see, these lines right here going up, showing you it's the next trading day. All right, so that's where it opened the next day. Let's click over and see what happened. All right. So we entered the trade. We're in the trade at 220.43, and it looks like it's coming down. There's going to be a support right here. I'm going to just put the support right here. That's how I'm looking at it. Since it's going to be in the way, I'm going to make it gray. All right, you guys, I'm going to make it gray with a bunch of lines, so it don't be in our face too much. All right, so we wanted to break this. We broke this level. We're looking for this thing to drop We risking 25 cents, so we risking 25 cents. We want to make at least double that. So our potential for profit, we want to make that at least 50 cents. So that's going to be at 219.93. 219.93. All right, so let's put an arrow at 219.93, 50 cent drop. 219.93 right here. So we're entering right here. This is our reward where we want to exit the trade at around this previous day close, 219.93, or around that 219.90 area. So potential. So let me show you guys. Let me put an arrow. And let me put a box. So we enter right here. Potential for loss, and this is the potential for profit. As you can see, the potential for profit is way more than the loss. So the potential for profit is at least 2 times that risk. This risk box up here. So we're gonna. All right. So we're gonna move these risk boxes over here, just because they're in our way. I don't like too much things in the way. So this is the risk. Make this risk red for you guys, just so you can get an example of how I look at things. It's the risk. That's how much we could lose in the trade, and that's how much we can be green in the trade. Potential for profit. All right. So as you can see, the risk is way littler than the potential for profit. The potential for profit is way bigger than the risk, which I love to see. All right. So now let's see. We're in the trade. It cracked that 220. It cracked that 220.43 area. All right, let's see what happens next, you guys. Let's click over down here. All right, perfect. All right, next candle. All right, we got dojis. And remember, we're at the support. This is support right here. We wanted to crack that 220.20 area. All right, so let's see. Not a doji. We might get a push up, you guys. Let's see. Push up. As long as they use this as a resistance, we should be okay. And if it turns this into a support, if it bounce on that, I'm gonna explain everything. I'm gonna explain everything to you guys as we go. Just follow along. All right, that resistance is holding up. That resistance right there is holding up. Very good. All right. All right, it's not trying to crack. All right, push back up. All right, turn that 220.20 into a support, which means we're gonna try to push up and test this resistance up here again. So by eliminating fear and emotions, you just gotta play it along as like the support and resistance areas, so you can know what direction it will go next. If it bounced here, if it bounced there, get rejected here, or get rejected there. So I see that it bounced right here, so I know it's gonna go back up and test that 220.40 area. So let's see. Excuse that helicopter, son of a fuckers. Fucking might shut up. All right, let's go next. All right. Okay. All right. So it just pushed above. It's now testing that 220.40, 50 area. All right, now it's testing that resistance. So it pushed past this resistance, right? So now it's testing that resistance up here. Now, if we turn this into a support, it's going to definitely push up to that 220.90 area. And we don't want to do that because our stop loss is right here. So we want to make sure it don't touch our stop loss, which is right here, you guys. So 220.67. So let's just see. Let's just put a line right. Let's put a line right there. Matter of fact, let's put a line right there. 220.67. We don't want it to touch 220.67. All right, so let's keep going. See what we get. Sorry for the shaking, you guys. I'll be back. Here we go. All right, let's see what happens. Boom. All right. All right, let's see what happens. As you guys can see, it turned that into a resistance as calculated. Now, if we come back down here, and it's going to test the support level, but we got to make sure it don't bounce here yet. We got to make sure we get a candle fully 2 candles below it. All right, that's 2 candles. That's 3 candles. All right, it tested that. Now we got full candles below that resistance that we should have. Now it's going to act. It should have acted as a support. So let me explain to you what I see, my vision. All right, push down to the support, push back up to the resistance. Now it passed that resistance, testing this resistance, came back down. If it would have turned this resistance, previous resistance, into a support right here, it would have pushed up, but it cracked down. And then it got rejected, and then it just broke the support right here. So let's see what these next candles are going to be, you guys. Let's check it out. All right. And as we can see, obviously, this is a support right here. So we could put a support. We're just going to do it. Put a support right there as well. I don't like a bunch of lines, so I'm going to make this gray as well. A bunch of lines in it. This is support, though. I'm going to make it gray. All right. So here we go, you guys. Let's hit the next button. Hit the next button right here. There we go. All right. Nice. It's looking like it's bouncing off these levels. It's bouncing. Looking like it's definitely going to bounce Okay, if it bounces, it's going to test that 220 area, which it did. If it pushes above it, then I'm gonna let you guys know what's going to happen next. Let's see. All right, it's looking like it's trying to push above it. Got rejected by it. Nice, nice, nice. Getting rejected by that 220 area. We want to see it crack that 220 area though. Come down here to that 219.90 area. That's where we can take our profits at. Excuse me, guys. All right, it's looking like it's trying to push above that 220 area. Touch that 230, 240. If it hold above this 220 area, it's gonna touch that 220, 40, more so 50 area. We'll see. Let's see. Crack down. Long wick to the upside. It looked like it's trying to test that resistance up here. Long wick to the downside though, which means it got rejected. It failed. All right, now it's at 220 again. Let's see it crack. Bunch of consolidation moving sideways. Consolidation moving sideways is letting you know that the market does not know which way when to go. It's indecisive. It could go either way. So be safe. It's anytime you see the market moving sideways and you just don't want to hold during sideways movement, just exit the trade. But we're just going to hold this out just to see what direction things going. There we go. We got 220. It looked like it cracked it. Okay. It tested resistance up here again. See that long wick? Sign of weakness. Anytime you get long wicks like that, signs of weakness. All right. All right. Looks like it's pushing. Now, it pushed above this resistance right here, this gray line I got, right? Now, if it turns this into a support and keep going up, we'll exit the trade because now we can see the direction changing. But long as it keep not turning these resistances into support, like it could bounce off and turn into support now. If it don't turn into support, then we're going to stay in the trade because that's letting us know that the bears still have control. So the bears still have control long as they don't turn 220.20 into support. So it pushed above the resistance at 220.20, but it then turned 220.20 into support now. See if it bounce right here and go up, now we will exit the trade because the direction changed for the micro. All right, so let's see. All right, it's going down. Nice. Now that's where we take our profits. See, that's where our profit target was at. Took profits, easy, nice. That was an easy one. So look, you guys, this was the risk and this was the reward. Easy trade. And if you wanted to, you could have took at least 90% off the trade just to see what direction this thing going in. Let's see. Let's say I took 95% off the trade. Let's see, just in case. But see, it tested the previous day close. That previous day close will act as a support. So you do not want to hold when it's close to the previous day close. The previous price it closed at the previous trading day. That's the previous day close. The price it closed at the previous trading day. That act as a strong resistance and sometimes a strong support. Right now, if it's trading above it, it's going to act as a support. So now I will be expecting this thing to bounce. Exactly, bouncing. All right. We exited. Remember, we took our profit. This is where we exit. This is the risk. This is the reward. That's how you calculate your trade. That's how you do it. So let's just see how this thing ended. Nice. It broke the previous day close. Nice. That's good to see. Came back down to the previous day close, broke it, and tested this support over here. Nice. Then bounced back up. Nice. That's nice. That's good to see. The thing is, we could have stayed in the trade long as we didn't see 220.20 turn to support. If 220.20 don't turn to support, we're good. The bears still have control long as 220.20 don't turn to support. But we took our profit because why? We stuck to our plan. This was the risk right here. We entered right here, and this was the exit. And look at that, we exited right there. That's very good. We follow our plan. Anything different, we're not following the plan, and that's where things go wrong, and that's how you can lose your account easily. And look at that. 220.20 turned into support. What happened? It pushed up to the next resistance right here. And then it came back down. But more than likely, I think this thing, the overall market was going down on Friday. So I think this thing going to crack. Look at that, you guys. Look at that. Broke the previous day close, that white line. Came down, broke the low of the day, which was right here, and washed out. That's all, man. That's all. You just got to follow your plan. You could have held 5% of your position if you wanted to try to maximize somewhat of your trade. But, you know, that's not really maximizing, but that's trying to squeeze out a little more juice. But, you know, we took our profits. We stuck to the plan, and that is how you trade. That is how you want to trade. We calculated the risk, was this red box, and the potential for reward was the green box. Our reward was double the risk, so this trade met our requirements. It went the way we were trading the way the market was moving. The market was moving down. As you can see, I could go back over here for Friday. The market was going down. The market was going down, which means stocks are going to go down. And look what happened to Apple. It got murdered. Wow. I can't believe I didn't see this. Apple got murdered. Why? Because the market is moving down. And when the market is moving down, the VIX is moving up. So I also trade based off that as well. When the market is moving down, the VIX is going to be moving up. Why? Because the VIX is a volatility, and that's letting you know the volatility in the market. And they let me know that the volatility is up as far as the downside, and the market went down. And when the VIX go down, the market go up. So the market went down, which means Apple is going to go down because Apple followed the market, not super closely, but it followed the market, and the market crashed. So that's what we love to see, mini crashes. And that's how you trade, man. That's how you trade. Just make sure you always calculate the entry. And as you can see, we traded the gap. It closed right here, and then it gapped up right here. We betted that it's going to fill the gap below, which it did, which our entry was right here at the support where it opened, and then pushed up. So it came back down, cracked down. We shorted. We held to our target, and we exited the trade. Man, that's how you do it. And we got out right here. Where is it? We got out right here, man. We got out right here. And this took about probably 30 minutes. Not bad. And the potential for profit was, if you was using options, could have been huge. This was about, so we enter right here. This was about 0.25% with regular shares. But with options, you could have made a killer and probably got at least 10 to 20% with this trade. Easy money. You guys, that's how you do it. I'm the Young Investor. Have a good day.